We have Rajesh Kothari with us to discuss more about that, the earnings season, and how they're approaching the markets. Uh, let's talk about quality of earnings which are coming out and the commentary out of it so far. Rajesh, what are your thoughts, especially beyond the Nifty or the index companies? What are you sensing on the way things are being managed on the business front?
Well, I think, Ajay, this first quarter, just like last year first quarter, is a quarter, which is not going to be that great. So commentaries are also cautious. Of course, everybody is using the, terminology, assuming third wave is not severe. People are hopeful for second half of the current year. April was good, but May was, of course, very, very disappointing. And in June, probably from third or fourth week onwards, most corporates have started seeing some recovery. So April to June, nothing much to talk about. Of course, on YY basis, it looks great, but on QOQ basis, of course, because of the COVID, it is impacted. However, one or few important points are that exports are doing very well. Global economies are doing very well. So the companies which are positioned for the exports growth, they are posting reasonably strong, decent numbers compared to, of course, pure domestic focused companies. Similarly, capital expenditure companies, the companies which are into, the capex kind of a, category of the market, I think those companies are also reporting reasonably good numbers compared to what otherwise was expected few quarters back. So that's a mix. I think corporates are more hopeful about the, second half of the year, and they expect recovery to be strong, as we move forward.
Capital goods, let's talk about that. L&T is something to watch out for on the leader front, but there are a lot of mid-cap capital good companies, which people are looking at in terms of participating in the capex cycle. You are also positive on that. Tell us the categories of companies. Is it the ball bearing companies supplying to other bigger, or is it the engine companies, or what exactly are you researching right now within capital goods?
So Ajay, yes, that's a very interesting question, Ajay. Within CapEx, there are a number of sub-segments to play in India. So while, of course, one end we have companies like L&T, which is like, of course, the giant. But actually, if you want to play the real capital goods, which is just not the construction of roads and ports and railways, but much beyond that, then there are a number of sub-segments. Say, for example, you talked about the bearing segment. So that's a segment which, we like that space. We have invested in this space from quite a few years, and we remain positive on that space. Similarly, there is a segment called pumps. Now, in this industry also, just like bearings, so if you look at, for example, bearings, the 3-4 companies globally, and similar companies in India, the 3 companies in India, all are, subsidiaries of the parent companies of US or the global companies, they are basically controlling most of the market. And as the industry starts recovering, which they are already seeing, if you look at the numbers which are being announced by 2 of such companies, extremely strong numbers, very strong EBITDA margins, very strong gross margins, and also reasonably good revenue growth. I think the same trends I would say one would expect even in the other subcategories of engineering space. Pumps is one segment which we are positive. Some segments which are uniquely positioned for data centers, the management of data centers, because that's going to be huge. It will be fueling the growth in India. And the companies which are catering to those data centers, they are also going to do extremely well. I'm talking about the engineering segment. So, such companies, that's another segment which we are positive on. Then also there is a one segment which are into automation and innovation, which are into the robotics, the process engineering, and companies. For example, we are holding companies like ABB. We are holding companies like ABB Power Products. We are holding companies like Honeywell, Timken, SKF. So combination of such companies, on which we are reasonably positive. Please put a disclaimer because we own these companies for our clients in PMS.
Right. What about financials? There's been a very large period when financials has been very underperforming coming in from there. All NBFCs, banks, especially large private banks like Kotak, HDFC, etc., even NBFCs, it's 40% of the weight. How are you analyzing financial and what's your stance on them?
Well, during last interaction also I mentioned that banking and finance is a proxy to Indian economy. And the Indian economy is going through painful time due to, of course, COVID-related issues. whether it is a MSME segment or whether it's a retail segment, both are going through a little bit of pain. So while structurally we remain positive on the top what I would say institutions of this country, we have been underweight on banking and finance for quite some time. But from now on, we are started adding weightage to banking and finance. Within that, of course, we are sticking to the companies which are high quality institutions with a best of the asset quality record. As the economy moves from the second wave impact is reducing, and most of the things come back to the normalcy, we expect even the NPA cycle to come down. The corporate recovery is also going to be reasonably strong. The loan book growth on corporate side, which have been very, very single digit, I would say low single digit by Indian banking system, we expect even that to improve because corporate balance sheet is also improving. And that's the one area which was a cause of concern if you remember the last time bull market. But this time, the deleveraging by corporate India has been very sharp, and that's good news for Indian banking system. So I think banking from here on, incrementally, if you ask me, then we are being positive. We have been underweight, which we are slightly, now adding to the weightage in this space.
Right. Just one word, Rajesh, you've been in the market for a long time. You understand cycles and also pulse of the market. So my next question is not really about portfolio management, but just a feedback on the sense you're getting, talking to your peers, talking to large clients, and looking at the way all quality and all categories of stocks are actually moving. One side, there's a fear that we are ripe for correction. The other side, it's market just continue to climb the wall of worry. What are your thoughts? Do you think a good correction is looming around? And actually, whatever may trigger it, some global cues, some crackdown on tech stocks in China, but actually it may land up making Indian markets healthier?
Yeah, you're absolutely right. So no bull market is without corrections. And similarly, this bull market also would see a number of corrections in the journey. So if you look at 2003 to 2008, when Sensex became 5 times in 5 years, it witnessed corrections of 20% and more in Sensex 7 to 8 times in that 5 years period. So I think corrections are normal. One should continue to expect corrections in market. But I think from the current market standpoint, there are two important things which I would like to give attention from the viewer's perspective. One is don't fall into the trap, and that's important. So don't buy the junk stocks. So as market keeps moving up, the kind of tips the so-called tips which people keep discussing, the quality of such stocks is always kind of more of a questionable, correct? So avoid such companies. Remain in the market. Do not underinvest in market, remain over-invested into equity as an asset class, but stay away from low quality, poor quality stocks. So that's first thing. Second important thing, people keep talking about correction, and that has been people are waiting from last 8 months, but it is not coming. Two things are important. The corporate earnings growth is going to be very, very strong. And the corporate balance sheet is also equally as improved, as I mentioned previously. The balance sheet of corporate India has improved significantly. So on one hand, you have a strong earnings growth. On the other hand, you have an improving balance sheet. And on third hand, of course, you have the strong liquidity. So combination of these three, it means that even if the correction comes, one should not worry too much about it. One should keep investing. It's like buy declines market. Do not worry too much about it. I think in an environment where inflation and the interest rates are like 5-6% kind of an interest rate, equity as an asset class will keep outperforming the inflation or any other asset class over next 5-10 years. So I'm not too much worried from the broader market perspective. But yes, I do worry about the euphoria which gets created in the few segments of markets, which I think one need to be extremely conscious of and cautious of. One should not get into it, because then whenever there is a 10% also correction, such stocks always go down 30, 40, 70, 80%. So that's the only word of, I would say, caution from the retail investors' perspective.
Right. All right, Rajesh. Always excellent to get your thoughts on various factors impacting the market.